Mark Draper from Gem Capital. Joining me today is Paul Xiradis, and we're talking about the Australian banks and the residential property market in Australia. Paul, there's been a lot written by many people and some good sources that the residential property market is expensive in Australia, and in particular the impact of an expensive residential property market on, say, the banking sector. What's your view of where the Australian banking sector is at right now?
Look, we quite like the banking sector still. We have been quite pro the banking sector for some time. The reason for that are numerous. One is that they've offered a very attractive running yield, which we think is quite sustainable. Two is that we think their earnings are actually quite rock solid. If you look at the banking sector as a whole, despite earnings have been fairly soft, generally speaking, across the market over the past 3 years, the banks have been able to increase their earnings year in, year out, and have also been able to increase their dividend year in, year out. Balance sheets incredibly strong, probably one of the highest capitalisation banks globally, and in fact the four major banks in this country are a handful of a few AAA rated banks globally. So the banking system is very strong. The concerns about housing, I think, have been overstated. In fact, we have seen some weakness in property values in this country over the past 6 months, but particularly where it has been very hot in the past, in the sense of from a valuation perspective. The Gold Coast has often been talked about. We have seen values correct quite dramatically. Perth, in some areas, we saw it run up quite dramatically. That has corrected, but the impact of the banks has been quite minimal. The reason is that they're very well reserved, and also that the loan-to-value ratio that they do apply to these types of loans is quite high, and they do protect themselves. So we're not concerned about housing in the banks. We think that's overstated.
And there's also been a lot written that mortgage holders are well in advance of where they have to be in terms of their repayments. Is that fact or is that fiction?
No, that is true. We have seen mortgage repayments move very strongly in advance. We've seen that reflected in the stats. What we have seen is rates been ratcheting down, individuals been maintaining their repayments the same rate as previous. So that's one way of actually repaying their mortgage. And people have been a little bit uncertain about the outlook. So the best way to actually secure that is by having greater equity within their house, and that's what they have been doing.
Fantastic. Paul, thanks for your time to talk about the banks today.
No problem.